Let's get started right now. Rob Lunar, CEO of SureVest, that's a CI financial company. I think between what we see so far, Rob, and what we're going to hear momentarily, maybe some of these question marks that in everyone's head might be addressed, and certainly we could see the markets react to them. What was in there? What was missing from your vantage point?
Well, I think to your point, Charles, we're going to be hearing from the chairman over the next 30, 40 minutes, so there'll be some more color. That's just the statement that we're getting that from. I think, like our first guest said, that the narrative is that continual narrative. This is going to be transitory. It's nothing to worry about. We're going to see inflation spike. Let's remember, we had 3.5% unemployment not too long ago, and we couldn't get past 2% inflation. We're going to get this sugar high. The Fed's preparing for that, but they're also trying to tell us they think things are going to be back to normal in 2 years. They'll let it run hot for a little bit of time. And so I think, meanwhile, the market's okay with that, but let's hear what they have to say.
Overall, as we've had a few moments to digest this move, again, from the headlines, there's nothing earth-shattering per se. I think, though, the idea that the Fed acknowledges that inflation will be hotter this year than before, 2.2% from 1.8%, but they see it going down next year as the Fed's way of saying this is transitory. Powell's going to say that over and over again. So as an investor, how do you reconcile that with the things you're trying to achieve in this market, Rob?
Yeah, great question. And I think it is transitory, Charles. We're going to open the economy back up. That's going to be a sugar high. We're getting all these stimulus checks into the hands of consumers. But stimulus checks are not going to get us through the next 2-3 years. And that's why they see GDP going back to 2%. And when you see that, it's not going to be the industrials. It's not going to be the utilities that are getting that 20% top line growth. It's going to be technology. So like our other guest said, look, technology got maybe a little bit ahead of itself. Technically, I think we've consolidated. It looks good, but those are the names that you're going to have to rotate back into. And for the market to go up with such a big allocation to technology, you need them to participate. So investors who are maybe gone all the way on the other side now into these dividend-paying names, you might want to use these pullbacks to buy some of the growth names that we're going to need to lead us in the future.
Amazing stuff. Really, this is the kind of conversation we need to have on a day like this.